Hello, this is Dr. Paul Cottrell, the student Dr. Paul Cottrell. So today I'm going to go over the market, but before I go over the market and how you should be positioning for the Fed announcement today, because I'm recording this on March 22nd, pre-opening in New York. I'll go over some of the data indicators and then how you should play the Fed announcement, the rate hike announcement, possible rate hike announcement. But please, if you have a Twitter account, please send a tweet to Peter Daszak from EH. We know what EH is, right? There's certain words that I don't want to say to trigger a problem with this video, so it stays up on YouTube. But he blocked me because he is denying the fact that the genesis of the crisis came from a 2008 paper. And after that, there were funding mechanisms that were taking place and dual collaboration in different labs across the big pond, all right, that led to the problems that we have today, all right? And there's also a guy, his name is Peter Ginsburg. He's a journalist. I don't know him at all, but he is supporting people like Peter Daszak. All right, so you know what? We need to actually have people start doing some journalism on what really happened and actually read the papers that I've been telling people to read, because I've been right for a lot of this crisis. All right. Actually, the only thing I think one of the only thing, well, maybe not the only, that's too hubris to say, but I think the biggest mistake that I made covering the crisis was that in the early days, I was projecting in the first 18 months that 65 million people in the United States would contract, and 6.5 million would pass away from the disease. At that moment in time, monoclonal antibodies weren't online yet. We didn't know about some of the off-the-shelf pharmaceuticals that could have been used. And we didn't know that metformin could be actually protective because it blocks some of the receptors. So the reason why I said 6.5 million was because diabetes is so rampant in the United States. But it is being found that metformin actually can be protective in the crisis that we're in. All right. And what is interesting is that when you look at certain types of receptors that that can activate glucose situations, it's the same receptor that the Middle Eastern version of the problem that we have uses, and they're closely related. I don't want to say certain words because I want this video to stay up on YouTube. So that's why I'm being kludgy. That's why I'm being mysterious in the way I'm phrasing certain things. But the people that know what I'm talking about exactly can figure it out. I'll do another video where I'm not so cloak and dagger, but that will be on Brighteon, Rumble, and Bitchute. Please go to Twitter and send Peter Daszak a tweet asking him why it was okay to fund the situation that we're in, especially after the findings that took place in 2008 across the big pond. All right. And then this Peter Ginsburg, send him a tweet because he is supporting people that are pushing the cover-up story. So people don't really realize the nefarious activities that certain agencies within certain governments have been doing. I don't want to get into details because I want this video up, but you know exactly what I'm saying. So send those guys a tweet asking them, why was it acceptable? Why was it acceptable to fund these operations that led to the carnage that we're in? And why hide it? Especially a journalist, why hide it? All right. And then the journalists will go after people like myself saying, well, you're not a doctor yet, even though in clinic, as a second year, we actually were in a situation where we were treating patients that had the disease of the crisis that we're in. You know, it's amazing. You know, and that only virologists, these journalists, only virologists could really understand what's going on. You know, and because, you know, people may have you know, other education that unless you're a virologist, there's no way that you would understand what these guys did. Meanwhile, Peter Ginsburg doesn't realize that I had bench work from my master's that I did at Harvard dealing with HIV tap protein. All right. Okay. So I want to go over the market now. The VIX, now we're trading, the time right now is at 8:40 or so. VIX in the after hours has been trading down, but there's been a little bit of fluctuation. We're trading at around 21. Remember what I said, in the high 20s and high 30s, that is a lot of risk and markets will sell off. When you start getting into about 15, that's a market rally, and it's just ticks up, ticks up, ticks up. So we're trading in after hours at 21. Risk is off right now. Now, if we look at the yen, look at the currencies. Normally I look at the yen, but we'll also look at euro as an indicator. Euro has been trading up through after hours, so strengthening relative to the USD. Okay, that's usually a sign that if rates were going up, if the dollar was strengthening or people were buying bonds in the market or whatever for that for let's say the United States, the dollar would strengthen, the need for dollars would increase, so the euro would decrease. Or if there's a crisis in Europe, Europe would most likely the euro would start to fall. But right now, the last hour or so, there's more volatility and downward pressure, so the dollar is strengthening within the last hour. But the overall trend throughout the night was an increase in the euro. Okay, so that's somewhat of risk off. Let me rephrase that. That is an indicator of risk taking. But there's going to be volatility as we get to the Fed announcement. I believe it's at 2 o'clock, the Fed announcement. So as we get closer and closer, there's going to be more and more volatility in the market. Where is it going to be? Where is it going to be? Where is it going to be? Okay. And then once the announcement happens, then there's going to be a big candlesticks moving around. So you may see the VIX fluctuate, you may see the currency market fluctuate, but if you average this all out, it looks like probably a 25 basis point move. Okay, now let's look at the yen. Yen throughout intraday has been weakening, same as the euro. So that's looking like risk taking. So the market's looking like probably what they expect from the Federal Reserve is going to happen. Okay, but again, the currency market is most likely going to be a lot of fluctuation as we get closer to the Fed announcement. Okay, so we have three indicators so far. The euro is strengthening, the yen is weakening, and the VIX is going down in after hours. All bullish. Okay. Now we look at the oil market. The oil market's trading at 69, just below 70. All right. I did close out my position. I had an entry point in Gush at about 100 back last Thursday. I closed it out yesterday. I think it was at 115. So I had an increase of 15 per share, doing what I was, was telling you to do. That if you can play these markets by looking at the long ETFs and the short ETFs, depending on where, and this is more intraday or swing trading. Okay, now, so we have, and when oil is going up, that's a positive sign, right? Okay. Because it's below 70, there's gonna be this resistance level to try to get past the 70. It was at around 75 and then started crashing, right? Because of the news with the banking industry, and went down as low as, I think it was 64 or so, maybe a little bit lower than that. But it's going to take a little bit of energy to get past that 70, unless we get some really bullish information in this news announcement. I suspect in the news announcement it's going to be, markets are stable, we're watching, there could be some contagion, some other banks may be stressed. We have different facilities that we've opened up that are actually balance sheet expansionary for the Federal Reserve, so that's an inflationary situation. But we're also contracting the balance sheet with the rise in rates. So it's kind of like they're playing both sides, a QT, quantitative tightening, and a QE, quantitative easing. Short-term quantitative easing and a more longer-term quantitative tightening. So on the average, it's quantitative tightening. It's basically how it's going with the Federal Reserve. So there's probably three possibilities. They either do nothing, a zero increase. All right. If that happens, the market will view that as, okay, the Fed is pausing and there's probably instability in the market. So in the very, very short beginning of the trade after that news announcement, markets will probably rally and then start to go down because they're worried about contagion. But then the next day, probably the market will rally. All right. And the reason being is it's like, oh, it's bad news, sell. Oh, everything's stable. We don't hear anything that's bad. Market will rally 24 hours later. That's my thinking at this moment in time. Again, you have to be agnostic. And this is the reason why I said, if you have cash on hand, do not deploy it in the morning. What you do is wait until the Federal Reserve makes their announcement, then decide if you want to go long or short. Okay, so for the next situation is that they go 25 basis points. If they go 25 basis points, which is the consensus, most likely people will go, okay, they're still worried about inflation, but they feel confident enough that they don't have to try to backstop the market in the short term because of the banking crisis, and therefore markets will rally. Now, if there's a 50 basis point move, which is a very low probability, but possible, what might happen then is markets will definitely fall, probably severely. This is the reason why we're walking into an unknown. And, because I did my PhD on chaos, in chaos theory, using chaos theory and modeling financial markets from Walden University. So, especially in the oil and currency market where there's a lot of volatility, oil futures. So when you're moving into an unknown, what you really want to do, and there's so many different possibilities that could happen, your probability surface function collapses at the moment of the event. So this is very quantum physics oriented, what I'm talking about. So you're at a point and there's a possibility landscape that can happen. And all those possibilities collapse once the event happens. And then a new set of possibilities surface function. So this is what is called a collapsing of the function. So the probability curve function. So this event of the news announcement that's going to be coming up around 2 o'clock. I believe it's 2 o'clock. They it could go 0, 25, or 50, or there's others, but it's very, very low probability. It could go, they could drop rates. They could, increase to 1, but those probabilities are very, very low. It's these main ones. 0, meaning no rate hike, 25 or 50. No, that's basically the consensus. So with those, we're walking into a situation where we don't know what's going to happen. And you want to benefit from the news. So the best thing to do is wait. Cash on hand, wait until the news announcement. Then if the market starts to go down after a 15-minute clearing of orders, then you can start to see the direction of the market. It doesn't always happen because there's sometimes a mean reversion, a larger mean reversion that's happening, but wait the 15 minutes after the news announcement. These candles are going to be larger after the news announcement, and you trade accordingly. If the market seems to be trending down, then like I said, for intraday trading, and you want to take some risk, it's SPXS. That's 3 times leverage short position. If you want to do the long, that's SPXL, and that will be a 3 leverage position, 3 times leverage position that is moving upward. Okay. How I'm going to play it is I'm going to look at what happens in the oil market. If I start sensing that, okay, it's not going to have enough power to blast through the $70 a barrel, then I'm probably going to short oil. If it looks like very bullish, I'm seeing a lot of bullish signals going on in the market, then I'm going to go long on oil. So how do I go long on oil? Gush. How do I short the oil? Drip. All right. It's very simple. So that's how to manage through this unknown. Okay. Once we get to 2 o'clock, we'll know what the Federal Reserve decided to do and how markets digest that information. Hopefully you've learned something about how to deal with Fed announcements. I think this is definitely the first recording recently dealing with how to intraday trade the Fed announcement. Now, I want to make it clear, because I just talked about how the market's going to, what's going to happen in the market. But I want to make it clear that there are individuals out there, and ones that are listening probably are very similar to myself. You can have multiple talents. You can be an artist, but also be very good at mathematics, or be an engineer, or be a nurse, or a doctor, or whatever, right? A medical doctor, or whatever. You can have multiple talents. And when you have lived for many decades, you build up a series of expertise in different areas. If you're not a boring person, most boring people stick to one thing, and they may be very, very good at it, but that's not the personality that I have. The personality I have is I like to reinvent myself. I think that there's something to be said about how Leonardo da Vinci approached his life. He was an engineer, and he was a mathematician, and he was an artist, a painter, a sculptor. He did a lot, military planner. He did a lot of things. He was a Renaissance person, right? So there are people in society that are Renaissance oriented. And so this Peter Ginsburg that I want you to tweet and ask, why aren't you really covering the crisis and showing the nefarious activities of different agencies within different governments? Instead, he has these horse plans, thinking that you have to be XYZ to understand something. So basically, he's saying that if you are not a virologist, then there is no possibility for you to understand anything that's dealing with virology. He's also saying that if you aren't an MBA in finance, or if you're not a PhD in finance, there's no way that you would be able to understand what I'm telling you. I don't believe that. I believe that if people have a desire to learn something, they can learn it in many different ways, many different modalities. They can learn it in school. They can learn it on the job. They can learn it as a hobby. They can go to the library and pick up a book and learn, a whole new discipline. Da Vinci was self-taught on many subjects, right? So I don't understand why we get into this idea that when people discuss issues in a particular domain, that it's only the experts that have the knowledge, that have the final say on what things are. No, there are facts in different disciplines. There are also assumptions in certain disciplines. There are also subjective and objective things within a discipline, right? So when people go after individuals saying, well, you can't talk about certain subjects because you don't have the wherewithal academically, then I don't believe that. I believe that you can learn through a lot of different modalities. There's nothing wrong with spending time in academia and learning a certain discipline. There's nothing wrong with leaving the discipline and learning a new discipline in academia. There is nothing wrong with being self-taught. Steve Jobs was self-taught. A lot of these people that start up companies are self-taught. Most of what Elon Musk does, is self-taught. School is supposed to teach you how to think. And then when you're in the real world, you're supposed to learn on how to think and build a repertoire of knowledge, right? Based on your interests and, your skill set, right? Your innate skill set. So people like Peter Ginsburg, saying that people that are talking about the crisis, if they're not a virologist, they must not have credibility. Or if they're not an MD, they must not have credibility. Well, here's the problem. You listen to most of the medical establishment. If you listen to most of the virologists in this case, they're either afraid of afraid of hurting their position and saying things that are controversial, or they're worried about they're worried about losing their position, or they're worried about the funding from the agencies that are doing the nefarious activity. Because most of research is government funded, right? So for these different facilities, I'm trying to use certain words so YouTube doesn't bring down the video. The point is that these people like Peter Ginsburg are saying to you that you don't have enough knowledge to understand, and therefore an expert has to tell you how things are. But this is how the system tries to control you. Be a Da Vinci. If you want to learn something, you can learn it. And when people go after people, when people come after people like myself that have many different talents, that are polymath oriented, and And, I am too formally educated. I know that. All right. But that's what I wanted to do. But to assume that I wasn't successful in different careers is a bad mistake to make. um, so Peter Ginsburg, he's one of these types. You have to be an expert to be able to explain what really happened. And by the way, he's pushing the narrative that supports things like what Peter Daszak is saying in the news. Use Twitter and explain to them why it is acceptable. And take it from me, all right? You can learn anything, if you put your mind to it, all right? And you talk to people that have more knowledge in that subject, and you probe, and you become a better person, a more knowledgeable person. The more knowledge you have, the more you'll be able to command your own future and take control of the situation. That's basically what I'm doing with these videos. I'm explaining to you, don't be a victim of what the central bank is doing. Don't be a victim of what is going on in the banking crisis. Don't be a victim of inflation. I'm explaining to you on how to game the system. Peter Daszak didn't tell you that. Peter Ginsburg didn't tell you that. I'm actually trying to give you knowledge on how to manage through these different crises. So thank you for listening. Please pay attention to me. Do not trade until the news announcement. Don't close a position. Don't open a position. Don't do anything. And wait for the news announcement. Wait 15 minutes. Let the news digest in the market, and then put your position in. Thank you for listening. If the market does go down, and you're a long-term investor, this may be a time to build that base, slowly build that base that I'm telling you about. Again, we have a very strong support level because of the Fibonacci sequences for the S&P 500 at 3,650 and another one at 3,800. Right, those are two really big support levels based on the Fib sequence to the COVID drop and the Fib sequence to the drop in the market back in 2015. Thank you for listening and have a nice day.